back in our old house, and as you can see, it's a bit stark in the background. I haven't put up the decorative pieces back there, but I will soon. But it does look a little bit bare back there, but it'll get better going forward. Anyway, in this video, I'll take a look at three of the major currency pairs: the dollar versus yen, the euro versus US dollar, the sterling versus US dollar. From a tactical perspective, the dollar versus yen is the biggest mover today. It has moved about 0.6% to the downside. That is a stronger yen. Why? Bank of Japan signaled they may look to raise rates despite expectations of about 50% that they would only raise rates between now and the end of the year. So that gave the yen a boost. The dollar versus yen move to the downside. I'll talk about that and other currency, the other two major currency pairs in this video from a technical perspective. So let's get started. Let's start with the euro versus US dollar. What we saw in trading yesterday was a move above this swing area. The swing area defined a ceiling through here. It comes between 1.1730 and 1.17419. In trading on Friday, after the employment report, the price did move above that level, only to rotate quickly back to the downside here, and find support buyers against this other swing area in early trading yesterday to start the new trading week, and that helped to push the price higher. And as you can see, the initial reaction was to sell against the high of that swing area at 1.17419. That kept the sellers in play, but then we rotated back to the upside, and although we traded above and below level, we did find support buyers against the low of this swing area right here before moving to the upside and closing above this swing area right here, and that made this level a key support. And as you can see in trading here today, the market did extend to the upside, getting above this high price going back to, I guess, the end of July. But the price could not stretch up to the high price for the year, which is at 1.17874, and we rotated back to the downside using the old high right through here as resistance, right here, and push to the downside. But what we saw on the downside was support buyers against the old swing area here, the high of the old swing area right through here, and that helped to neutralize the market. So right now we start off with the price battle between the 117.4419 down to 117.30, and resistance of the 1.1769 up to 1.17874. That will be that battle will be determined over the next few trading days, if not today. So watch out for either support here. If you're a buyer of the euro versus US dollar, you want to buy against this area right here with the stop below. If you're a seller of the euro versus US dollar, what you want to do is see the price extend below this level and lead to further downside momentum down toward the rising 100-hour moving average. That's a blue line in this chart. And then we'll see what happens at that level. Also on the other swing area right through here. What you don't want to see if you're a seller is a move back above the 117.69 level, and certainly above the 117.87 level. That would be more bullish and keep the buyers firmly in control. I would give the tilt more to the buyers with the price above this swing area, the breakout. We'll see if the price can hold that level on the dip in trading here today, and push back to the upside if it does break below that level. However, be a little bit more cautious from a technical perspective. Let's take a look at the dollar versus yen. I mentioned that this currency pair moved sharply to the downside off of the Bank of Japan comments. And what we saw is in the process is the price moved below this old swing level right through here. Now we broke below the level here and tried to stay below level through here, but could not do it. Rotated back to the upside. Next time we came down to it, we found support, all through here. Lots of support levels within this area between 14654 and 146.803. That level was broken to the downside in trading here today. Should have sent the price down to our low price right here. We couldn't stretch down there. We also have the 100-day moving average here as a target. Since then, we've rebounded back within this yellow area. Now's the time of, either move to this side of the fence or move back to this side of the fence right through here and start to target the 100-day moving average. So key level here between the 146.54 and 146.803. The bias a little bit more neutral within that area. But if you're a seller, you don't want to see the price break above the 146.803. This is a second chance since going back here to increase the bearish bias. We'll see if the market can keep that bias going in the downward direction, or do we fail and then rotate back to the upside. And finally, let's take a look at the sterling versus US dollar. And we saw him trading yesterday to start the week was a move to the upside with the dollar selling. That move took the price up to this swing high right through here near the 135.54 level. Found willing sellers against that level and trading here today. However, we broke above that level and have been able to stay above that level on the corrected move down here, which is more bullish. However, we did find some resistance against this swing area right through here, where we have a number of different swing lows and swing highs coming into play. Going back in time, this more of the ceiling through here over this period right through here, which is going to be key for this pair today. If we're able to get above 1.35918 and stay above the level of the buys, tilts more to the upside with the other targets, including highs right here, ultimately heading up toward this swing area right through here as the next key target area for the pound versus US dollar between 136.73 and 136.82. Conversely, if we do find the willing sellers, and we are so far coming against that level, then getting back below the 135.54 level would be the first step to more selling confidence. And then we need to get back below 61.8% retracement in this move to the downside to increase the bearish bias for the pound versus US dollar. So there you have it. A look at three of the major currency pairs. My name is Greg Michalowski. Good fortune to trading. Bye-bye now.